Royce. Hey, how you doing? No. Am I the only one that's going to swing?
I don't know why
I'm only going to swing up here.
I don't want to know why you're swinging up there.
The only swinger here.
The only swinger here. And everyone else,
just a swing, and there's some songs. It's karaoke. Everyone says karaoke.
4 guys are swingers. Is that a statistic? Is that a statistic? I don't know.
I was just going to say that 2026 came in like a wrecking ball. That's all I was doing. It was this. Yes, because it's been great. Today was a red day.
Solo, we can't hear you.
Yeah, I knew that was coming. Be quiet, Clarence Carter. In the back behind me, it's red. That means today was red, but it was much deeper red when it started, and now it's back to almost whatever. It's that whole algorithm thing they do to grab your money. So this is after the bell. From Arbitrage Trade. It is a Wednesday, as I said. Yeah. And my guests in the top right are Daniel Hopwood. And then we have in the bottom left, it's Josh Morgan, a.k.a. the Bankster. And the bottom right, we have Quanticus Maximus. That is Royce Wells. Yes, who also can sing pretty decent too. So we should get him to do that on here sometime.
No.
See, I'm trying to support you.
Hakuna Matata. That's it.
What a wonderful phrase. Yeah, I got you.
What a wonderful phrase. That's all I got.
The Arbitrage album will be out by the end of the year. All right, let's go. We've got I gotta do the disclosures though, which is that we are not financial advisors. This is not financial advice. Hopefully this is educational and informational to a degree. And please always consult a real investment professional for making any financial decisions. But hey, we like to entertain the possibilities here, and we have opinions aplenty. And let's move on to the markets. I have the numbers for today. We've got the Dow Jones was basically flat after being red pretty good during the day at 49,149. We've got S&P 500 was down 0.5%. 69.26 is where it is, and the NASDAQ was down 1%. So that's so algorithmic. 0, 0.5%, 1%. It's almost like it's scripted. The NASDAQ was 23,471. The dollar is pretty much flat at 98.88. Crude is up a little bit from last week to over 60, because remember it was below 60. Something may be going on there as Iran gets more and more intense. We have gold is at 46.31. We have silver is over 62. Both are hitting all-time highs here and there. The 10-year is at 4.13, which basically not much happened with the 10-year. Bitcoin 97.5, XRP around 215, and Ethereum is the one that was the big winner at 5% up today at 33.71. So that's laying down what's happening today. Well, of course, we like to discuss what's happened over the last week. And so Daniel says there's a rotation. So please inform us where that temporary, just until they need to go back to tech again to pump up everybody's portfolios again. What exactly is being rotated where, Daniel? Rotation expert.
Darin, I just want you to know that there's a parallel universe where you're like a quant or something. And you're not such a hater.
I'm not sharing a title with him. I'm out.
You've seen the movie Interstellar, right? You know, you're like another.
Don't put me back in the basement, Mom. Now go ahead. So tell me what's rotating where? Hurry up, tell us.
All right. Forgot we're on a time crunch. All right. So, I mean, when you look at the S&P as a whole, it's really struggled to hit new highs. When you look at the S&P equal weight, it has continued to set new highs and outperform the standard weighted index. And you've seen that because there's been a shift into the energy sector, base materials, so like the metals, and financials up until like the last day. And the theory is that the entire trade was tech the last few years, right? It was tech coming out of COVID. It's been really the AI trade kind of like the last 2 years. And the money is starting to rotate into some of the other sectors that haven't seen as much love. And this is very typical kind of like late stage market move. And I don't mean that in the sense of that like we're going to have some kind of like recession crash after the point. It's just like a pretty standard.
So badly, perma-bear up there.
No. That's first of all, that's Darin. Okay.
That's what I'm saying. Perma-bear up there.
Okay.
Yeah.
So like, even if you look at the market in 2000 when, tech was got absolutely destroyed, the other sectors that were up were energy, base materials, consumer staples, right? Like if you were just long those names, you would have been up on the year. And so, I'm not saying that it's a crash, but like I do think it is like a true like trend change. And at least I can speak for my portfolio individually. The trades that have worked out for me the best have to do with base materials or energy, right? Like if you go to our Substack and you look at some of the charts that we post,
now you're gonna have me check my charts.
Yeah, trust me, my two best trades were in our Substack on the Apocalypse Band, and one of them has since reached the top. It's up like 70%. Another one is like, I was like, oh, do I need to like close these out? Another one, I was like, oh, this one still has like a while to go until it hits the top of the Apocalypse Band. So if you want shameless plug, more charts like that, subscribe to our Substack.
Yeah. And on top of that, remember last Wednesday I said I left GE. Have you seen what happened to GE since?
Yeah.
No, I didn't look at it. If Royce says leave, I shut my brain off.
Yeah, you just please and thank you.
I can't see that.
Got to get closer, I think, and down. There, that's the 318.88.
I can see the number, but you can't see the screen.
Yep.
That's okay. It's a nice swoosh into the gutter.
Which, by the way, Daniel, you said this is rotation. I guess it sort of is, but it's still because of the same thing, which is tech. I mean, they're the ones that need the metals. They're the ones that need the building the country, blah, blah, blah. So it's all about tech. It's just a one-off from tech and what tech needs now to build the infrastructure.
Yeah,
right?
I mean, sure, it is tech adjacent, right? Tech does run the world now. But as far as like a trading perspective goes, and that's not to say that like there aren't AI stocks that are going to like crush it this year and other things like that, right? But it's like when you look at the sectors that are moving the most, it's the things that really feed the economy versus, kind of like the trade that has been the last few years.
So all the tech companies have now thrown the money around enough to each other that they got to find somewhere else to go now. That's what you're saying.
Well, we'll see where that money lands.
Yeah. Is the circle broken?
Pocket.
That's isn't that an old hymnal? The circle be broken or unbroken? I don't remember what it was. That was back in the days when there was pews and all that good stuff. So let's go on to a good start, which is kind of what we talked about. I mean, is there anything else you want to add to that? I mean, you have this little stat that you want to throw at us, which sounds right out of anybody that goes on CNBC would say. But please let us know. What is that stat?
When I say I thank my haters, I'm talking about Darin. So the S&P 500.
Someone's got to wait a minute. Hold on. Someone's got to make this even. There's got to be equality on this show, unlike the media, financial media. Go ahead.
So the S&P 500 is up more than 1% after the first 5 days of this year. Historically, when that happens, the full year is positive more than 87% of the time, and we end up on average 16% on the year. So that being said, I mean, obviously, who knows, right? And there's still room for a downturn, but we're up into the right, baby. We're back. Okay. If you ever thought we weren't back,
there it is.
We're going to talk about all these other things of why we might not be back, but we're back. Okay.
That's what I like to hear. That's what I like to hear.
Might we have another, what was April last year called when the market went down? Liberation Day.
Yeah.
Really? Might we have another one of those when we jail Powell? All I'm gonna say, not financial advice, is buy the dip. I don't know.
Hey.
I got so much to say, but I won't talk about Powell just yet, just in case it's in the show or somewhere.
It is. It'll be like
it is.
Yeah.
I just like saying jail Powell. I guess I'm really proud of myself here.
Pretty proud of that.
Yeah.
I am
Yeah.
really proud.
Well, I mean, you also have the Supreme Court thing about the tariffs. If you're going back to that, that's still out there, and then they're trying.
I
We
honestly
don't
think
know.
that's the thing, like pitting the market.
Yeah, we'll see. I mean, no, you said now it's going to be S&P 8,000, right? That's what I'm hearing from you. Or maybe we go 9,000. Forget the 8,000.
I think the
Just go
market
right on
just
past.
wants to make sure it's like, all right, cool, tariffs are done. Like, we're done.
That's the excuse.
Jail
Let's-
pal, give us no tariffs.
Jail
Like, let's
pal.
rock.
All right, before we move on to the macro factors, Josh, you got anything about just in general?
Oh, well, I mean, just really just about that, the January barometer. It kind of interesting part about it is that it is very accurate when it's predicting, like if we get the first 2 weeks and it's green, it's very accurate. I think Daniel may have said it. It's like 87, 88% accurate.
87%, yeah.
And yeah, I mean, the returns are pretty much scripted, anywhere from like 10 to 15%. If you do the opposite, like if it's red for the first 2 weeks of the year, it's a crapshoot. It's literally a coin flip. And the returns are significantly smaller. It's like 2 to 4% on the year, but we might still end up being green. We might still be red. But apparently the January barometer, because of all the money that's coming in, all the money that's flowing back in from all the, portfolio rebalancing and things like that, and the influx of cash that happens in the first of the year, it really does give you a good barometer about like where that year is going to go.
Well, I mean, we did just pump the banks with a lot of money here this last month or so, right? And there's still a lot of money out there that all of a sudden, they were worried about what was going to happen when these bank ERs came out. And I wasn't. I said, no, they've pumped all this money into the system. They're going to have some of the best ERs they've ever had in their life. And sure enough, here they are.
Did you guys know last year JP Morgan made $150 million in profit every single day? That's what it comes out to. Profit too, not revenue. Profit.
That's not a bad year.
That's
So
insane.
every day or every business day?
Every day, including weekends.
Yeah, that's pretty good. It's not that hard to do when you get billions every few months pumped in. All right, Royce, you got anything to say before we move on? No, the way he's shaking his head, I don't want him to say it.
I'm going to save it for another day.
Yeah. How about another segment? All right.
Okay, yeah, that's another day for me. Let's go. Do the dog days.
So since we all definitely agree with all these reports and everything they say, we agree with all the ERs and everything they put out there. We agree that all these accountants that are responsible for making sure that these corporations are reporting correctly are not in the party stage of their life, and just whatever companies say and tell them to report is what they're going to report, which we've seen, by the way. They've actually given some slaps on the wrist to some. That's a very long introduction to what I'm about to say, which is that the December jobs report came in the lowest, since July 24. What else you got there, Daniel? Since we are now saying that all these reports are correct, go ahead.
Yes. So unemployment fell to 4.4% from 4.5%, which, very small amount. So I actually looked this up because I was curious. Is that, how when it comes to like the non-farm payroll numbers and employment numbers and jobless claims, they always get revised, right? And the last year they've been revised quite heavily. When they release the unemployment percentage, that number is just set, even if all that data is revised in the past. So there's no update to unemployment ever, which I just thought was interesting. It's they're we pull that data from somewhere else and we don't check that ever again. So that's just the number.
It's the most front forward. Go ahead. What'd you say, Josh?
Yeah.
It just makes them all the more reliable, right?
Exactly.
They don't have to go back and correct anything. They just,
It's the most front forward number, though. I mean, people that don't even follow financials that much in the news, they will remember they're more likely to remember what the unemployment number was than the revisions that happened the next time the report came out, and were just a quick, hey, by the way, the last month it was actually 9,000 down. So I think that's why that number doesn't change much. It's all a game. Go ahead, Daniel. What you got?
Yep. So one of the more interesting numbers is that the U.S. added 584,000 jobs in all of 2025, which was the weakest year.
The yeast? The yeast?
Yeah, it's the yeast. Sorry, no monster today because I have to go to the doctor after. So,
Oh, boy.
Dilly.
yeah. I wish, man. Right, trust me, right after get that shit in. But that the 584,000 jobs added last year is the weakest jobs growth outside of the recession since 2003. So it's one of the slowest growing years we've had. Now, the counter to that is that we are coming off the best employment numbers that we've ever had, right? And things are more or less stabilizing is the narrative, Darin, not my narrative, the narrative. Okay.
Thank you for using that word. Go ahead.
And I thought one of the more interesting things that I read is that the way that Trump is positioning this. So when you look at the numbers specifically, it was 654,000 private jobs added last year, and that the government job loss is what turns that number down by, like 75,000 jobs or so. So Trump is really, and he also kind of did this with the December jobs number as well. He's really trying to play into the private sector job growth versus the public-facing job growth. But really, when you look at the numbers, is employment slowing? Yes, but unemployment isn't really increasing. And, in my opinion, jobs are kind of in this stalemate where it's like, it's not horrible, but it's not great. But how guys feel about when unemployment percentage goes above its 50-day moving average. So, Darin, tell us how it blows up.
Oh, I know, but it's not going up to 9% because it'll never get admitted. So there's no reason that those days are over that we might have actually given the correct employment numbers. We're relying on companies who rely on these numbers to be successful. So therefore, okay, I'm going to let you tell me what it is that your employment or unemployment isn't, and don't do something that might hurt your own company or the economy. I want you to stay within this little range so that it can be played both ways, good and bad, whatever we need at that point. But that's all you'll get from me, Daniel, on that one.
Okay. Very tame.
I just think that okay, I'll shut up. Never mind. You gave me credit, so I'll hush there.
I've been so good. I haven't said anything. I've been so good.
Let it explode now. Go ahead before we move on.
So the jobless, basically the jobless claims. It's not people who are jobless. It's how many people who are applying. Anytime there's a holiday, less people are applying for jobs. Seasonal jobs are already taken, and people basically just stop doing all the things because they're not wanting to go out. They're wanting to do other things with family, with XYZ. So statistically in the fall, around between Thanksgiving and Christmas, the amount of people who are applying for unemployment and all those other things, they always fall. Always. Right? So basically, it doesn't necessarily mean that there are less people who are unemployed. It just means there are less people applying. Right? So, and then the number of jobs that are available, because they are creating AI jobs, because they're creating AI agents, some of this stuff is being automated. So that means, yes, is the same amount of work being done? Yes. Are they needing people to basically babysit the AI? Yes. So people aren't necessarily losing jobs, but people aren't necessarily being hired for new ones either. So
I think the only thing I'd add to that, though, is that I don't have the numbers, but I believe seasonal employment for the holidays was substantially down from the prior year.
Oh yeah, absolutely. FedEx, to be precise, has an entirely new automation line. So all the seasonal workers that had normally happened in Memphis, that's gone. So 100% automated. So much more efficient, much less delays on your packages, though I don't believe it. By the way, something out in November arrived yesterday. But no fault of FedEx. I'm just going to call it customs and everybody else.
Sitting outside of China. for a long time.
An ugly sweater arrived yesterday, folks.
Oh boy.
Yesterday.
Christmas sweater 2026. Here we come.
So think about when I ordered that for it to just arrive. Yep. But that's okay. I digress.
So even though we're going to throw in another number here, which is the CPI,
6.7.
somewhere in between.
God, imagine if CPI was 6.7. Back to 2021.
Your shipments will take anywhere between 6 and 7 months, right?
Mhm.
But the other thing was I did see a Bitcoin or a crypto that was 6.7 coin now out there, which is ridiculous. So it's just come
you
up
could
with
have made
something.
money off that, Darin.
Exactly. I should have created
Instead,
it.
you were a hater.
Yeah,
You were a hater. You had your opportunity to shine, sir.
that's right.
You could have been that trendsetter.
Yeah, it's less than the fart coin though right now, in as far as value goes.
It's
All right, so
6.7 USDT.
Yeah, there you go.
No, 6.7x.
He found it. You see how quickly he found it?
It's on TradingView. I don't know.
Is it really?
All right.
Yeah.
So, oh
Maybe
boy,
I'll do that for my.
we are not making
chart.
recommendations here at all.
Yeah, please don't.
do not buy this.
My recommendation is do not avoid this. And that,
Although you're
Okay.
Do avoid this. Do avoid this.
Daniel,
The
you're-
Jedi
you're-
mind trick. You saw that, right?
Jedi. Don't fight it. CPI was it rose 2.7 annually, and although I like your comment, which I won't repeat in this section, because even he's kind of saying, this doesn't seem right. So the CPI rose 2.7. There's that 7, but the core CPI jumped to 2.6. So there's your 2.67, which is the best
You had
in
to
4
reach
years.
for that really far. At least you
I
reach
did.
down for it.
And I stumbled while I was doing it.
Oh,
So what does that mean, Daniel, for those that don't follow CPI?
Yeah, so it's inflation has more or less kind of like stayed the same. So it's hit like a solid level, right? So it's no longer, rising drastically, which was like a big worry when it came to like the tariff stuff. Is it above the Fed's target of 2% by 0.7? Yeah, but it's, at least we're not in a runaway phase anymore. My big issue is that when you look at it, they're all like, oh, core CPI is at 2.6, which is the best in 4 years. Core CPI is, and this is where I'll definitely agree with you, Darin, is like
X.
the biggest like bullshit like Fed metric out there, because it's CPI X food and energy, because that's quote the two most variable costs. It's like when they take like the like rents out of like cost of living adjustment for people. It's like, you're gonna take the thing out that's a third of people's like expenditure. It's like it's ridiculous. So I'm just like, why do we even look at this number? It's like it's the stupid vanity metric. But all that to say is that when you look at these, I do have Darin in my body. We gotta remember, someone's got to bring the news. Okay.
It's
We
like
can't all be a
mass
hater.
index. It matters.
Yeah. But so if you look on the betting markets, everyone's pricing in no rate cut this month. So it's really looking like that, for potentially like the rest of Powell's term, which we'll get into how that'll go, that they might just keep rates kind of flat. Now, the interesting thing is, and the Fed does not set this part of the curve, but if you look at 10-year yields, it's a very interesting chart. That's all I'll say is go take a look.
Okay.
Well, just tell us.
It doesn't. It has a nice compressing wedge that, if you overlay it with the arbitrage bands, looks like it wants to run to the upside. And if you know anything about, if yields move up, bonds move down. And my speculation is we're just waiting for a great news event, which we may talk about in a moment.
In just a moment, right?
That could give investors a lack of confidence in owning U.S. debt drastically overnight.
Ooh, you're such a tease. What you got there, Josh? Anything you want to throw in here on these numbers? And
I mean,
Nope.
I just, especially going back to the last topic and this topic, I just don't know how you even trust any of these numbers. I mean, I'll go full Darin on this one. And
Guys, we got to talk
Never
about
go full
something.
Darin.
I don't like.
I mean, I get it, but I mean, to use Daniel's word, like these numbers are bullshit. They don't make any sense. Like we have half, like 25% of them are made up. If you look at, Daniel was talking about the yields and things like that. And if you look at the market, like all these numbers came out, we saw little to no knee jerk reaction. You didn't really see much of a market move. Treasuries jumped like a quarter of a tiny little percentage point. Like
Right.
barely even an indentation was made, because I think everybody is of the same mind that, okay, yeah, these are the numbers, but these are not really the numbers. We'll get to the numbers eventually. And once we get all of the data, then we'll make a move. But for right now, it's kind of the same reason I think that we're not going to see that, quarter cut, is because I do think that we're still trying to figure out where these numbers actually are.
So you say no quarter cut, huh?
I say
Less and less people are gullible. Less and less people are gullible.
$1.
They don't take things at face value.
$1.
$1.
$1.
Give us
Right.
100.
Right.
Give us 100 bips. Cut 1%. Run it hot, baby. Let the good
Yeah,
times
that's what I'm
roll.
saying.
America's on the decline. Let it ride.
You can look up historical inflation data, and that's just another one. I just can't go along with it. I don't believe we're at 2.7, 2.6. And I didn't, and we were at and then they admitted we were at 9%. It was like, no, feels like 20. Let's move on.
Well, you just have to look at how M2 moves, right? That's the real measure of inflation.
That's even correct. Yes,
Right?
you're right. Yes.
Well, I do think that number is correct, but I won't get into that. But when they said inflation was like 9%, right? But it's like, but we just printed a third of all money to ever exist. How is it not closer to 30?
And we keep printing more.
Oh, yeah. Oh, that train ain't stopping.
I got a question. Have any of you read the entire Genius Act?
No.
No, of course not. Tell us, Boy Wonder, what's in there?
No, you missed your opportunity. No, it's please tell us, genius, what the Genius Act says.
Or are we talking about the Cliff Notes?
He can understand it more than we can.
There are definitely subtleties in there that basically, if you're not paying attention, you would have missed. Did you know, like basically at our banks, right? Banks insure our money. FDIC insures our money, right? Did you see what they did to the FDIC in the Genius Act? That's a no. They are favoring USDT over the US dollar now as of the Genius Act, which means they're not backing our money as priority anymore. They're backing the Tether digital version of our money as the primary thing to be reimbursed. So if there is a run on the bank, if you have crypto, you survive. If you don't, you don't. If there's not enough to go around.
That was one of my notes.
There's still that whole dollar debasement theme. And honestly, I saw
But if they're printing, that means they're not necessarily having to cover what they're printing now.
Oh, of course not. No, they never have been.
And in doing so, the dollars that have been one-to-one matched with a digital dollar survive, and everybody else, well.
What's the same thing? I saw a thing earlier about how, anybody who, I think it was Iran specifically, and what is their currency? The lira. And anybody who put faith, like if you put your dollars in actual lira over the past 2 years, you've lost 96% of that value.
Yep.
But if you had invested all of your money into Bitcoin or any, stable coin or any Bitcoin backed product, like you're still up. Sitting, you might have lost, even if you bought in at 120 and now we're sitting at 95 for Bitcoin, mm-hmm. you're down 20%, but you're still not down the 96% if you had, invested it wholly into a dollar.
Yep. That is 100% correct. But there is another catch that goes with that. Have you guys read the Clarity Act or basically been following it? Why am I doing all the research?
None of us read these things.
I feel like I'm. Wait a minute, Daniel, you're supposed to be telling me
things?
stuff. I'm not supposed to be telling you stuff. Come on.
Oh, someone's got to teach me something on here eventually.
Clarity Act. If you go look at TradingView and you go look for Tesla X USDT, Google X USDT, SPY on USDT, all of those guys appeared the day the Genius Act was law. They are backing the U.S. stocks with digital assets that mirror the stock. And that means they can sell that digital asset to someone else without having to report that they sold the shares. They're giving the literal rights to the shares to someone else. And the reason that the Clarity Act is trying to be passed right now is that the whales are out there in digital land going, yeah, you can have some, I can have some, I don't have to report that. Because it's cheap on the commodity side of the house.
Very cheap. Yeah,
so
I think
in my world, people keep trying to stuff me in the trunk, put duct tape on my mouth. I don't know, but it's like, wait, that's happening, and no one's saying anything. Literally, in the last seminar, yes, it's a shameless plug. Go watch that Joker. There are over 20 to 30 of these big tech stocks that have already done this, and they're not even hiding anymore. There's an exchange called Gate.com. Basically, remember like Watergate and all those other gates? Literally all of them appeared there that day.
Josh, fellow ape, this should sound familiar to us.
I mean, yeah.
This should sound very familiar to us back in 2020, 21. Come on, think about it. All of these tokenized stocks that's how they got away with creating more stocks available and said they were a 1-for-1 and they were backed by that stock, even though they really weren't. You remember that? That's when they were saying when you sell a float 10 times over what it is, but it's still a 1-for-1 because of these tokenized stocks that are sitting back in the ether and with billions and billions.
But in doing this allows something very, very dangerous. Meaning, now you have a digital asset that can trade at a different price than the regular asset. So that means in cryptocurrency land, it's a deflationary asset. That means even basically it's going down while the stock market is crashing. Technically, this asset is becoming more valuable. And so everyone's still seeing green, even though the stock market is physically crashing underneath it, because the asset that's deflationary is actually gaining value.
Yep.
So that means you can go crash the market and still be rich.
And you might do that on purpose. Because you've put all this money in this less than a penny tokenized stock, and and then you have a lot more in it, right? I mean,
I think on Crimson Charts, I'm going to do one of these charts.
Oh, there you go. Now he's a tease.
Just to
this thing is
spice it up a little bit.
This show is full of teasing. We started off with the swing down on Bourbon Street, and then we went to
that. You said that.
Yeah,
and then we went to Daniel saying, then we went to Daniel teasing Gail Powell, and now we've got him teasing with the charts.
Oh, so the Fed. Have you ever read about the Fed?
Yes.
Is that in there about the guy who's sitting on the Federal Reserve?
We'll get there in a minute.
Okay. I will wait. I will be quiet.
Royce, don't you read the agenda that I worked so hard to create?
I am making money for us.
Exactly.
Whoa.
Exactly. And reading.
You are supporting people following us. It's a symbiotic relationship here.
Mm-hmm.
There you go.
They won't stay if there's nothing interesting. Right? I mean, and I'm still finding time to read. Come on. I'm double lifting here.
Right. All right, Josh, this is your section. We're going to move on just for the sake of time here. And enough actual room on being allowed to upload this thing if it goes 2 hours. But Josh, so we've talked about this within the last year about like even Warren Buffett said, hey, you need to go to all cash or a lot of cash, a lot more cash than you used to have. And now here's the opportunity to buy real estate. And of course, we even mentioned Blackstone not too long ago. I remember one of these. So what's going on? I mean, we had Trump also say that he wanted Fannie Mae and Freddie Mac to buy 200 billion of mortgage-backed bonds. So there's something going on in real estate. What's going on, Daniel and Josh?
He never asked me.
Yeah, no, you get to wrap things up. It's much better if you wrap them up.
Lay this up?
Daniel set it up.
Want to set up? Okay, so Trump is planning to ban institutional investors from owning single-family homes, i.e., Blackstone. I'm not sure how many details you want me to give, Josh, but he wants this to do. He wants to do this to bring home prices down, and also, as Darin said, he wants to try to decrease mortgage rates as well. So really, this is a play for kind of what is being deemed the affordability crisis. If that will be the hot topic for the midterms, right? We saw Mandani win in New York, perceivably over affordability stuff and his plans to make New York City more affordable for people. I won't get into that, but Josh, maybe you can tell us how this is a good or a bad idea and what the actual implications of Trump banning single-family home ownership for institutions is.
Well, the thing is that, I guess the gist of it is he essentially just wants to nuke any investors like that, what he considers large investors. And again, this is all extremely vague because it's a random Truth Social tweet that grabbed headlines, and other than the 5 sentences that was put out there, we really don't know what his ultimate goal is. I know he says it in the name of housing affordability, but we don't really know which particular nuance he's going to go, because there are a lot of bad and good that can go with it. But essentially what we do know is that he wants to have larger institutions. BlackRock's a big name. They get a lot of heat for it, but anybody that's over 100 houses owned in a specific portfolio, and then you get up to the BlackRock's where they're in the thousands of homes that are in a portfolio, in the name of
Blackstone, not BlackRock.
BlackRock, thank you. Yes. BlackRock, and just in the name of housing affordability. The problem is that it's a very vague situation. We don't know, are they allowed to keep their current homes? Is it putting a moratorium on them actually purchasing them? Or does he actually want them to liquidate their portfolios? If they want to liquidate their portfolios, that's going to cause a massive run on housing. And it's going to be, it could literally be the catalyst for a housing crash. If he doesn't, then, there are some benefits to these guys. If you go back to the housing crisis, when they came in and everybody was doing, when we actually had our last housing crisis and they needed buyers to step in, they really, all these institutions came in and set a floor, and everybody was praising them and saying, oh my God, thank you for coming in and, buying up all these cheap distressed properties and these foreclosures. But now it's gotten so bad that they are, they're the pariah, and they're the ones getting blamed for a lot of these housing issues. The thing I don't think people really realize is the fact that even collectively, if you take all of these various institutions, they own a max of 5% of the entire housing market.
So just real quick on that. So the rough numbers are, it's 80% of single family homes are owned by individuals. 3% are owned by large institutions like Blackstone, the true kind of big private equity players. And what's left of that 17%, that is split up among varying sizes of real estate. I don't know, I'll call it funds, but it could be, Josh owns 5 properties, Linda owns 10. Okay, there's like a regional manager that manages like 20 properties. And to kind of add on to what Josh was saying is like, this headline kind of targets the Blackstones of the world, but it's unclear of like, okay, well, what about like the dude who owns like 10, single family homes? Like, what about like the regional real estate fund that owns 100 homes, but only in Florida? So it's like very unclear of what this actually means. And to Josh's point, if Blackstone and the huge PEs are forced to sell, 3% of supply, but across the US isn't great. It probably hits certain regions more than others, depending on how invested they are in one particular area. But if you start to expand that out to like, the smaller kind of regional and individuals who own multiple, then, you're talking upwards of 20% of the single family home pie, which does start to have significant impact, especially if you're going to lower mortgage rates. Like it can kind of like create a double-edged sword of rapidly decreasing prices because they're going to flood the market, and also potentially people buying back rapidly because if mortgage rates are low.
But the thing is, there are very, very, very few instances, and very like there are very specifically located. Like there's places like Atlanta, Phoenix, even recently like Charlotte and Houston, places that actually, those large hedge funds those large funds actually own a controlling stake. In order for them to actually have enough power to, you've got to have like 15 to 20% of a specific zip code or a specific city or something to actually put any kind of pressure on, inflating those prices, either with the selling price, with the rental prices. That's what is getting a lot of kickback, is because there are, some of these poorer areas, larger metropolitan areas that have, a poor, like Memphis, Atlanta, Houston, where we've got, they do have that 25 to 30% of a controlling share, and they can artificially inflate the rental prices and things like that. But realistically, it's not, banning them from buying it is really not going to make that much of a difference, I don't believe. Because you do have a lot of these like 5-10 house portfolios, like Daniel was saying. They can't actually control anything. They can't make that much of a difference in, rental prices, housing prices, things like that. To the skew of maybe 5 to 10%, what's really, it's literally the inflationary aspect of it, where we've got these houses that were, a $300,000 house is now a $500,000 house. Even if you remove all of these various barriers, it's still a $500,000 house at, what are we sitting at, 5.5% right now? That's like, when you think about monthly costs, that's an astronomical number that most people can't afford. It's cheaper to rent most places than it is to purchase right now, given the fact that you pile on home insurance, potential HOA dues, the 5.5% interest rates. You could pay a lot more for a lot less house. Whereas if you just rent, because rental prices are, again, they're much more controlled, much more stable, and harder to actually increase unless you do have one of those controlling stakes. So I just think they're getting a lot of undue hate, at least in this particular instance.
All right, Royce, I see you. Yes, Royce, jump in.
You guys are playing checkers. This is chess. Remember what I said earlier, what they're doing to the currency. They're making digital versions of the physical land. So imagine if they only own 5% currently, but if they're the first people into the digital side, where they're owning digital assets, like the digital title, the digital version of your house. If they're not basically curtailed on this side, that means they can expand into that side before anyone else is there. Right? So you've heard of people buying houses with Bitcoin. You've heard of people buying XYZ, right? With Ripple, with USDT. This is an entirely different game at the large scale. Basically, you have giant companies that are like, no one's thought about digitizing houses. Let's go dump billions into digital assets. Now we own the land. And Josh, secondary market. People sell notes all day in the secondary market. It goes from Mr. Cooper to Wells Fargo to whoever wants to hold it. Imagine doing that, but doing that in seconds on a crypto or digital asset blockchain. There is an entirely different market that no one is seeing yet that's emerging. And if the president wasn't on top of it, it would allow them to have a completely chokehold on, basically, because once again, every time they sell, the regular person wouldn't think to put it on the blockchain, but these giant corporations are, and they're basically are able to profit from those notes, sell those notes completely under the cover, and no one sees it because it's just sitting on a balance sheet.
Yep.
And I'm sure there are some there are some interests there, but I mean, I really think it's a lot more black and white, or a lot more easier to really, break it down to its core substance. I really just think it's something that we're going to see this, a couple years down the road, and it's, hey, it's a great PR point for midterms upcoming, because I'm the president of affordability. I'm making everything cheaper. I'm doing everything I can to help you get into a house. And then at the expense of, he's going to try to piss off, BlackRock and all these other various funds. They're going to turn around and be like, hey, here's some palms that were greased. Please don't do this. We love you. Thank you. And then kind of ends up, the whole administration kind of gets both, they're playing both sides.
No, absolutely.
And as an addition to that, which I saw he did add here, which was one of my three things, by the way, is that the whole 10% cap on credit card fees, that is getting pushed again. So what I'm, and that's going to make the banks mad, of course, because that's a big part of their profit. But what I wanted to throw in here is, if you pull way back, I think the creators of where we're going, there is an agenda out there. Of course, I would say this. And so they have these steps they've got to do in between to get to it. So everything that's happening right now, I think we'll look back and go, okay, oh yeah, he did this, then he did this, then he did this. And we allowed China to take Taiwan, and we took Venezuela, blah, blah, blah. I mean, all of this stuff is little steps towards what's already been decided, and we're going to
chess, not checkers.
Yes, exactly. That's it's an agenda that's already set that we're getting to step by step. That agenda 2030 may not be done. It may still being enacted right now. So
I need you to not talk shit about China, because my Alibaba trade is doing great right now.
So here's the thing.
Right here too, brother. Right there.
Keep their name out of your mouth.
Out of my mouth.
All right, Will. All right, Will.
So Shakespeare knew this moment now. I'll let that sit there. He said, all the world's a stage. We are all just actors with scripts. And all we're doing is playing along to this script that's already been written and decided by a certain few people in this world and being enacted by certain leaders within this world. I'll shut up there.
Guys, Darin just quoted Shakespeare.
Yeah, I don't really know what's happening right now.
all I have to say is that I've never had credit card debt, but if we get 10% cap on my credit card, I'm gonna figure out how to pull money out of that shit and invest it. All right,
but there's even a reason for that. It's to slow down the race of money and the interest that's growing to basically to wean off dependency on the regular fiat dollar. Capping it there. Do you know you can yield farm in the crypto side for 12%? A regular old Joe Blow. If you have crypto, you can loan it out at 12%.
They try to teach you that every day when you go into the app. It tells you, hey, you sure you don't want to put this in the yield farm? They don't say yield farm, but
Quite
that's what they're
literally,
saying.
Did they say it like that, Darin? The yield farm?
Not exactly. They need my voiceover. No, they don't do that.
Honestly, I might do it if it had that voice. It's like, hey, you want a yield farm?
You want a yield farm, brother?
Hey, would you like to put your money in a yield farm?
I need Hulk Hogan to come back and go, come on, brother, you got to do it.
And the yield farm.
That's right. That's
Yield
right.
farm, brother. Oh, yeah.
All right. Dr. Or Mr. T.
Mr. Macho.
Yeah. Mr. T did that too, though. He was that type of,
I pay the fool who don't yield for him.
That's
Pay
right.
the fool you love a bucket to.
Next Halloween, that's you. Let's go
Have
to.
you seen Will? Have you seen Will?
That's a good point. Yeah, that's much closer. Much closer. All right, let's try to get out here before it's 8:00. We've got to do this because it was teased earlier, though, which is this whole section on Jail Powell. Explain yourself, Daniel.
All right, so hear me out. We're gonna jail Powell, okay? So federal prosecutors have opened a criminal investigation into the chair of the Fed, and it's a probe looking into the renovations of the Fed's building that is $700 million over budget. And of course, this kind of like really came out when Powell put out a video a day or two ago saying that this is really politically driven for not giving the president the rates that he wants. But maybe, Darin, why don't you go first on this one? This obviously is going to be a big opinion piece for all of us. There's
Not really. I mean, you already. We only have so many months left. He's in position, right? I mean, when is it? When's he out? April? I forget.
May, something like that.
Yeah. So it's silly, really, at this point to even launch this attack. There's something else going on that we don't see. I mean, that's with any news that's out there. Is there's a deeper reason to this whole thing, and it's all part of let's call this Act 4 of the play in this specific chapter, because there's something going on there that we don't know, and everything is always a tactic. Look over here while we do this over here. So I really don't have an opinion other than what all you just said, which is what the media tells us. So sorry, I have to let you down on that. I don't have anything deeper than that.
Damn, that's sad.
I have information. I'm going for my information.
All right, Royce. Don't disappoint me.
All right. Who's his replacement? Who's
another
eligible right now to be his replacement? That's who you should be watching for.
It's another piece to Trump's plan. I mean, we got Bassett.
Oh no,
remember we got Bassett,
right? But
Bassett won't replace him.
Who is eligible to become the
he's
new
another
Fed
player.
chair? And then figure out where they fit in the crypto space.
Right. Which Bassett was there too, though.
Specifically, you're talking about
Kevin Warsh is pulling at 41% on Polymarket, and we have Kevin Hassett at 35%. Those are the two.
Who are these people, though?
I thought you were going to tell me.
I could. I can't be the always guy with the rabbit.
What industry are they from? What industry are they
at the
supporters
board
of?
Directors for Ripple, and
yes.
then see if any names match.
Exactly. It's the end of the.
Can't do that kind of research.
No pressure.
I'm not the guy that Joe Rogan has. Sorry.
We don't have time for R&D on the show. It must be done off the show. But the hint has been given there already.
I don't remember names. That's the only reason I'm not giving it.
Yeah, right. There you go. But now you just said
that board is in line and eligible to be the new Fed chair.
Exactly. It's all part of the script.
And if that happens, that means Ripple will also make a very large move, because that means mainstream adoption.
Yep. It's hard to. I mean, you get that put out there, that information put out there in different ways, but it's also in the middle of all this other junk that's out there. So it's hard to tell what's true and what's not true. So as Royce is saying, do your own
research. Do your own research.
No, what I'm saying though is do your own research, right? And look who's moving the pieces, the pawn pieces, and where they're from. It's so much deeper than what we get fed to via the media. It's and I in a few years I'll say, see, you called me a conspiracy, but I just had a graduation hat.
I just look at all the pieces on the board and go, you know what? What else are you touching? Do research on each one and then connect them all back.
Oh, by the way, the U.S. Mint
on Google.
Okay, go ahead.
So Kevin Hassett, who's one of the potential people, potential nominee for the Fed chair, is drawing attention to Ripple and its cryptocurrency XRP. As the current leader of the president's working group on digital assets, Hassett is pivoting and shaping U.S. digital asset policy. Analysts observe that XRP is frequently mentioned in policy discussions involving Hassett and the concerns around ETF timelines.
Go on.
And it talks about XRP playing a significant role in infrastructure.
Royce, it's.
But I'm not one to gossip, so you already hear that from me.
What the first?
We heard it from a Femex article, whatever the hell Femex is.
And when they put Basin in at SEC, or whatever he's doing. I mean, I forget who all the president's men are in this case, but he's definitely bringing pieces in that surprised me none at all. They make perfect sense.
In there,
business finance. Yeah,
he left Ripple to do that, and then basically now he's coming back and can basically rejoin that once he's the chair. Oh, isn't that convenient?
Not going off script at all. Good job.
I hope he brings rates back to zero.
I'm sorry?
Let it rip. I said, I hope he brings rates back to zero. Let it rip.
Actually, you might see that, but not because it's on the.
I actually don't hope that happens. I think that'd be horrible.
It depends. It depends on how he does it. So I'm like, there's so many things. We need to talk offline. We need to have our strategy meeting.
Yes.
Daniel. There is so much you're missing.
Well, you keep missing our market. Well, the ladies don't want to talk about markets. They just get.
Oh, hey, they watch these meetings. You can't say that. I'm defending them.
I'm just saying. they last time I brought it up to you, they're like, "This is a foreign language."
All right, guys, we are heading up.
Oh, I think it's a terrible idea. I mean, absolutely terrible idea. Like, if you, I know you said in your
hold on, I didn't say it yet. Don't spoil mine.
The military is what's really backing the dollar, but really it's the stability of the Fed that keeps backing the dollar. And if you destabilize the Fed, and if
you're not destabilizing, you're switching.
I get it, but I mean, look, we already have a very, very, very clear example of what happens when the president messes with the Fed. It happened back in like the 1970s, and it took us
and we switched.
And it took us like 15 years of high interest rates to unscrew up that whole situation.
But is it high interest rates because everything is worth more? That's why the interest rates are high, or is it high interest rates because of its inflation? Which one is it?
The dollar's worth less.
Wrong. The reason interest rates go high is because your money is worth more, and basically it yields more. When your dollar gets cheap, that's why the rate goes lower, because it's demand is so low that you are basically paying people, say, hey, take it. Hence the negative interest rates that Japan had in the carry trade.
But that's exactly what we don't want. The entire world is all based around their investments on the US dollar. Like, we want it to be
and
stable.
If you digitize them first and then rug pull, you can default on an entire system and all your stuff is still valued against a tethered dollar.
I get it, but
remember the tethered dollar is a private.
Goodbye, company. Deficit.
But Bitcoin is not
until someone else becomes the Fed chair.
I understand, but Bitcoin is not a U.S. asset.
I didn't say Bitcoin. Did I say Bitcoin?
A cryptocurrency.
Did I say Bitcoin?
You did not say Bitcoin.
Okay, cryptocurrency is decentralized. Like, the whole point of it is being decentralized. It's not supposed to. We need, in order for it to be, America first, America best, like, it has to be based around the dollar.
And it is, but this is the infrastructure that you're missing. Why do we have USDT, USDC, RL USDT? Why do we have different versions? Why?
Fraud.
Why don't we have just a single US dollar on the crypto side? Because they are creating decentralized banks. So if one currency or blockchain fails, there's a redundancy. So that means if one fails, you can switch to the other one and you don't lose value in what you have. Every time they set up another USDT, that becomes another decentralized bank. And it's still based on the dollar.
Sounds a lot like shares in the stock market.
Sounds like another company bankrupt.
How do you think the central banks came together? They basically said, "Hey, we gotta stabilize all this stuff," and they all agreed. That whatever name that IMF or whatever came, say, "Hey, let's do this," and they all agreed. And next thing you know, you have World Bank, and then you have all these centralized bank and Nostris accounts and all these other things to switch. They're doing the exact same thing, just calling it something different under the covers. And if you're observant, you can absolutely be a part of what's going on before it becomes mainstream. The early adopters, they will be rich. They will be crypto bros.
And that's why you get your cash now so that you can get into that movement. It's a virtual what? It's almost like a virtual crypto swap that's about to happen.
To me.
Pretty much what it is.
Oh, so I'm
Like you've done with stocks, by the way.
A very good example of why this is powerful for every single American. Ready? The equity in your house is normally not touchable until you sell your house. But if your house is appreciating that digital asset, you actually get access to those dollars without selling your house and are able to use those dollars in the digital world to buy digital things that may have a physical personification without refinancing, without anything else. Josh House dollars. There's 100 Josh House dollars. That's equal to 100,000, USDT.
That's nothing revolutionary. That's just a HELOC.
No, but you have to go to a bank and ask for that. You don't get access to that whenever you want that.
I got to be
And
honest. It's probably good that you have to go to a bank.
No, it is very good.
It's another regulator.
Listen to somebody that actually knows what the hell they're talking about tell you that this is a stupid ass idea. Because if your house depreciates again, then not only are you
that's also why they don't let you do 100%. That's why they force you to keep 20% of the equity in there just in case the market does go down. That's why no one lends you 100% in the real world. And in the crypto world, it's even less. They lend that 50% of the actual value. So I'm like, there are rails and there are guardrails to basically make this more than work.
Royce, is this a pathway for the U.S. to eliminate their debt?
This is definitely a pathway because guess what? Everything that you owe, just like they changed the Gulf of Mexico to the Gulf of America, if you switch from, I owe you in US dollars, we don't use that anymore. We use USDT now.
But you can't just declare it.
Sorry, Japan.
Oh, did they not just declare the Gulf of Mexico as the Gulf of America?
Yes, and everybody laughed about it.
All of the contracts that prevented America from drilling in the Gulf of Mexico.
No longer valid.
It's literally the stroke of a pen, sir.
All I know is a street sign down the street still says Gulf of Mexico.
Look on Google Earth.
I mean, that sign probably cost $1 million to replace, Josh. Well, we know.
At least.
All right. Well, I don't want to get off the crypto talk. I got to close out why we should jail, pal. Okay.
Thank you, because we're over an hour. So
jail him so that we can get the new guy in, and then we're rich.
Yeah, hurry the hell up.
So I think we all probably agree that this is optically very bad, and this just kind of furthers the sell America trade. And I have in my note, once again, go look at the 10-year yield, put on the intermediate band, and tell me, I don't trade bonds, right? I'm not going to do that, but tell me it doesn't look like a chart that wants to run. Now, on the other side of it, I do like that. I don't know if you guys know this, but the Fed has absolutely zero accountability for anything they do, right? There's zero repercussion, right? If they make bad decisions, if they have, runaway inflation for years because they politically do not raise rates when they should have, which, now, they're not lowering rates because they, that would be politically following the president. They're apolitical, right? That being said, I think we're holding them accountable for the wrong thing. Is it bad that they're $700 million over budget for the building? That's not great. should we hold Powell accountable for the 2021 runaway inflation? I'd be more in agreement with that one. But that being said, that's not what's going to happen, because once again, there's no system for them to be.
This is my best Britney Spears face.
Land your plane.
Plane is landed. We should not jail Powell.
$700 million is like a rounding error for how much government money goes disappearing.
Exactly.
No, I agree with you. I said it's the wrong.
The government hasn't passed an audit since like 1934.
Yeah. Exhibit 1, Pentagon. Go ahead.
I mean,
you're gonna finish some. You're about to finish this though. Somehow you've been teasing us through this whole thing. What's what are your final reasons?
No. I don't actually think we should jail Powell. I just like the statement. It was a good headline.
Jail Powell.
It's Jay.
It's not Jerome. It's jail Powell. Yeah, I got you. Or just J Powell. J Powell, right?
Send Jerome home.
Oh,
jail
nice.
Powell.
Nice. Now we see who's been out there with the signs, the protester signs. All right.
That's how Royce makes all his money, those NGOs.
That's right. Hey, Soros pays a lot of. No, I didn't say that. Let's go to. Let's now. Royce,
Joshua Soros defender.
Royce.
Yes, sir.
Royce. You tease. Now it's time for you to reveal your tease, because we're over an hour here, so I need you to do your tease.
Your problem.
Hang on, let me do this. Let's get the transition here. Go. This is after the Bell of Crayons and Charts. In a very
up there, right?
Okay, yeah, that's true. But I'm going ahead and bringing this part up, because I can do that behind the scenes while the graphic is up there. By the way, so
there you go.
Thanks. The magic. I have the magic.
He's
over here to the J Power.
J Power.
Okay, we're going to quickly see one person. We're going to see Daniel. It's a little focus on Daniel right now while we do the smile big.
Yeah.
He's the one behind the charts, literally in this case. So we're going to go. And here we go. It is up. NASDAQ X stock / Tether.
Yep. On gate.com's exchanges. Basically, it's QQQX USDT. And when did it come online, folks? When did it come online? All of a sudden, suddenly, magically appeared.
Suddenly.
Oh, my goodness. July 5th. I wonder what happened that week. But we won't talk about that.
I know it's right after Independence Day.
Right? Right after Independence Day, here we are, the new NASDAQ, a digital version of the QQQ, and as a digital asset on TradingView, reporting data and following the actual QQQ. Because if you go look at the actual QQQ, notice it says digital U.S. stock market assets versus U.S. stock assets. Oh, look, they're right there, neck and neck. Who would have seen that? I mean, it's not in plain sight, right? No. All right. Looking at
Is there a volume?
I'm sorry?
Is there a volume to this? I can't see it. It's chopped
no,
off.
I don't use volume. Volume is for news.
No, I'm just asking. No, I'm just saying if this is just automatically happens, or if the volume is assigned to it, or if it's exactly what was in the.
It's literally physically tracking. So whatever happens to
okay,
the
there we go. Yep.
Happens to this. But this is the crazy part about it. I can, or you can, if you own shares on QQQ, you can stake your digital version of this and give those shares to, let's say, Daniel or Josh, and not have to report it if you're a large corporation. So it means like the Amazons or the Apples or the Teslas of the world, the Microsofts. I mean, Robinhood, Home Depot, Netflix, or hey, pick your poison. Pick your poison. And you can sell your shares without selling your shares. You can sell digital rights to your shares. And so whenever they cash out, you never have to cash out of the physical U.S. stock market because you have the digital version to rely on. The other cool thing, or I think that basically maybe even sinister thing, is they can separate these at any point and say, okay, they're no longer, just like we know we're no longer backed by the gold standard, say, you know what? They're no longer backed by the U.S. stocks. They run independently. And now you have a commodity version and a security version, and they can run. And yes, there are arbitrage opportunities between the two, because guess what? This runs 24/7, whereas the U.S. stock market stops at about 8 or 9 hours a day. So this has futures technically built into it because it can trade 24/7. Isn't that nice? Isn't that pretty?
I don't know yet. It sounds like a big advantage for the big guys to me.
No, it's no longer a big advantage, because guess what? We showed you first. You can literally stake your own version if you actually own shares of this.
But so could they.
What's
I mean,
the yield?
institutions can own both and own twice as much in reality.
Sounds a lot like NFTs to me.
Exactly.
It is very close, but then you can separate it like you separate gold from the US dollar in the 1970s and say,
you remember all those people paying like $1 million for a little square block on a giant digital art thing that's now worth like 25 cents.
I remember that.
But you do know that they're getting plus that T+1, right, Josh? And basically they are moving everybody to where you will be able to trade stocks 24/7. You do know that's already in the works, right?
I know.
Oh yeah.
So this
I don't know what that has to do with just
infrastructure.
Magically duplicating everything, but
It's not magically, it's 1-for-1 right now. They're completely in sync. The dangerous part is if they are allowed to separate them and no longer back it by the shares and let them run independent of each other. Because if they're running independent, then they're no longer backed by the US dollar, they're no longer backed by shares. These digital assets are 100% backed by the actual physical shares in the real world. If they're allowed to sever that connection, it's like, nope, this is a commodity, this is a security. Each person governs their own side. And now basically you can technically sell those rights and not take a capital gain on the physical on it, and basically be able to cash out the crypto and still move around and buy other things, and no one be none the wiser. Hence the Clarity Act, which is why they're fighting so hard to put the Clarity Act to force them to still have to report when they sell or buy and who's whom, meaning is it SEC or is it CFTC?
Right. You got to have some type of accountability. It sounds like this isn't accountable yet.
This is
that what
not
you're saying?
accountable yet. So we've
So
had
you gotta be
4 to 5
clear.
months of the Wild Wild West of free open trade and
Exactly.
reshuffling and rebalancing of portfolios, and no one has been governed or spoken to or talked to about it.
Nope. Even though we had the board, that board, remember, that we created for
Yeah.
crypto?
Yep.
What happened to it?
I don't know. But
Wow, Wild
all
Wild
right,
West
guys.
sounds right. All right.
Nope. That's all I got. I'm running out of time too. I got other calls that are literally saying, "Where are you?" So I'm gonna stop sharing, and go back to you guys.
All right. That's the boss there. Or he hates that word. Quanticus Maximus. Business
That's
awaits.
okay. That's okay. But,
All right.
All right.
See ya. We got to talk about the stock that's being picked and then do the channels, which they did
Well,
last
Daniel
time.
is a winner. I think this is the
Yep.
most Daniel has ever won. So congratulations, Daniel. 3. He has 3.
Yep.
Thank you.
6223. 6223 is in second place behind Daniel.
Yep.
And then Royce and I are about to make our rise. All right. See ya.
All right.
See ya, Royce.
All right. See you guys later. Bye.
All right.
Royce is just leaving.
Yeah. He said he's got some appointments he's got to get to. So we got to just
okay.
quickly do the pick so we can get it registered. We can move on and be done.
Who's doing the channels?
I'll do it.
Well, we've done this before. Remember the 75-cent channel? We've done this before. So what you got there? What's the stock going to be there, Daniel?
All right, we're doing QBTS.
QVTS.
Yep.
It's
D-Wave
Qubit.
Quantum.
Oh, we did this one before.
well.
I've actually been
Different
keeping an eye
situation.
on this one.
Well, so that would be fair. We got one ape and one non-ape that have studied this before. So, I mean, it doesn't mean we can't repeat.
Sad thing is, I had an alert at 19 and missed it.
All right. So do you have a channel
You're
there?
trying to
that
like bottom pick it. Jeez.
Oh no, I literally I can screenshot it. Like I had an alert back in November right at $19, and I don't remember what I was doing, but it's like Thanksgiving or something. I don't know. Anyways,
it's when we were talking about these type of stocks. I remember. So what? Remember though, when you pick these channels, just like they did last week, they knew where it was going, and they got to pick the very top two.
This one's a little bit more.
Daniel gets to go first.
This one's a little bit more fluid than the last one was, though.
Okay. All right.
Yeah, dude, 27 to 31. So that should be
$1 each.
$1 a channel, right?
Okay. Yep.
Okay.
All right, Daniel.
27 to 31.
Yeah.
Well, I'll take the highest range and give Royce the one below that.
Of course.
I'm okay with it.
Top.
Repeat of last week, then. All right, and you then who are you picking next?
You can go, Darin.
I knew he was going to say that. I wanted him to go. I didn't want to go.
that old meme, like, damn, Daniel.
Yeah.
But
it was funny when that
what I'm gonna
happened.
go with.
Everyone said that to me, and I had not seen the meme.
Oh,
I was
I'm
like,
sure
what is
you
going
got
on?
texts like every 5 minutes about some.
It's going to be pretty easy. What I pick, I'm taking the next one down, and then Josh will have the bottom, and we'll see what happens, and just move from there.
27, 28. Okay.
You got 28 and down. So if it really goes crazy, you still got it. Just like it went crazy this week, and Daniel still had it as it went way up to 145 or whatever it was.
Oh, I was going to do actual fixed dollar ranges, but if you want to do that, that's fine.
That's what we always do. Yeah, that's what we always do. Because I think some weeks we won't have any winner, and that would just extend the season.
It's just a weird when this band actually pins right in between that $4 range.
Yep. All right, guys. Well, let's get out of here. It's 5:45. Wow, our time. And we've gone an hour and 16 minutes. This is one of the longest we've done maybe ever, and I hope it'll allow it to be uploaded. So let's get out of here. See you guys next week. Hey, don't forget, January 20th. Something's supposed to happen January 20th, which will be the day before we have After the Bell.
Isn't January 6th Josh's favorite holiday?
Oh, yeah. I love that holiday. I want to do highly illegal things and get off scot-free.
Oh, man. Which side are you talking about? The ones that planted people in, or the ones that actually were trying to...
All of the above.
Yes, I was going to say yes.
Yes. All right. See you guys next week. Bye.
See ya.